As we get deeper into our trading session today, I'm Marlon Bowling with you, and I'm joined by Ted Seifried of Zaner Ag Hedge as we take a look at the market activity today. Ted, thanks for joining us. I appreciate that very much. First up, your take on the weekly export sales numbers that came out today.
They've definitely been getting better, right? I mean, we've gone into a string of, hey, this is the seasonal time where we start to see more sales, especially for those new crop beans. So, I mean, string together the last 3 or 4 export sales reports that we've seen, and you got to feel kind of good that maybe we're going to continue on with that path. I'm thinking about going on to crop tour in not quite a week and a half. And generally speaking, while I'm there every day, we see flash sales of soybeans to China. It's a very typical thing. So this is the time frame to see that. That 1.5 million metric tons combined number for soybeans is a good number. Corn's okay. You really wish there were more. We're trying to come from behind here, and we're just not doing it very vigorously. So that's I don't know. There's more hope. There's more to be had there in corn, hopefully. So we'll see where it goes from there. As far as today's trade is concerned, man, this is very much a pre-report day. After being lower for the past few weeks, really, we're seeing some short cover, specifically in soybeans. And, I don't know if it really means anything. I think what means something is what happens at 11:01 Central Time tomorrow, how we react to the USDA's WASDE report. And I've been cautioning people, like, this August report's always a wild card because it represents the shift of how we see yield, right? Up until this point, World Ag Board and USDA have given us yield estimates based on statistical analysis of weather and trendline yield. This is the first objective yield that we get, and it's based on farmer survey, first and foremost, and also satellite imagery. And that satellite imagery has been kind of coming on a little bit more for them in the last few years. They don't say exactly what the percentages of one or the other. I think they don't, because I think it's a moving target, right? And I think this year they'll kind of lean on the satellites a little bit more because of when that survey was taken versus when the report comes out. The satellite sort of bridges the gaps, and we all know that there were some very good rains in that meantime. So the satellite might have a little bit more influence this year. At least that's my thought. Who knows? We'll see tomorrow.
Yeah, in fact,
the point is there could be a big surprise on yield because it could differ. It could differ very greatly from what the statistical yields had been saying.
There you go. Well, and we have had pretty significant rains just in the last 24 to 48 hours as well. Sounds like more on the way. And in fact, we had a new update from the Climate Prediction Center this morning on their monthly update on La Nina and El Nino, and they say they give it over a 95% chance that it will stay in El Nino mode through February. So I guess we better get used to it sticking around here for a while. I want to take a look at our current prices here, Ted, and we'll start with the corn. On our quotes provided by bar chart, we're still higher across the board, even though we've eased back a little bit. September corn now 2.5 higher at 483 1/4. And we have December 2 higher at 496 1/4. Getting pretty quiet over here. In soybeans, right now we have September up 5.5 at 1360 3/4, and November still 12.5 higher, and we're up at 1321 per bushel. Now on that wheat trade, a lot of attention given to that big terminal fire. There's a grain terminal fire in France that destroyed quite a few thousand tons of grain there, I understand. So anyway, that could be important. Now the wheat was higher this morning, and it's starting to fade. September Chicago wheat up 2 3/4 at 637 3/4. And let's take a look here at the hard red winter wheat in Kansas City. September 4.5 higher at 766, but it's off of its earlier high by about 8.5 cents. In Minneapolis, September wheat is 1.5 higher at 821 1/4. Now, the cotton market earlier today was higher, and we have December still up, but only by 20 points at 85.55 per pound. We'll come back in a moment and get the latest on our livestock trade, and we'll kind of pick the brain of that guy right over there. I'm pointing the right way. Ted Seifried. He's with Zaner Ag Hedge. We'll be right back. Okay, we're back with Ted Seifried, and we're going to take a look at our livestock trade. Here's a look at live cattle futures now on our quotes from bar chart. And boy, they're gaining a head of steam behind them here, Ted. October up $1.10 at 182.80, And December is now $1.07 higher, so look at them go. And on the feeders, well, they're over $1 higher all across the board. We will pick out September. It's up $1.25. Well, for that matter, so is October. September now at $251.87. Let me stop right there. So things really perking up on the cattle side. How come?
Yeah, I'm wondering that myself, especially on the feeder cattle with corn being stronger, even though ever so slightly. But we're really defending some trend line. There's a lot of analysts that are looking for this seasonality to kick in. Seasonally, box beef prices kind of simmer down throughout August into early September. Seasonally, we see cash simmer down. Seasonally, we have futures kind of break. And, it keeps looking like it might do it. And then we have this bounce off of that key technical trend line. You like to see that it's defending it once again. I don't know. Honestly, if the seasonality were really going to be in full effect, we probably should have started this already. So, we know that fundamentally there's a lot of bullishness that continue to underlie the live cattle market in the form of supply. We know that demand really hasn't wavered, even though we've got high prices. People are still spending money. We just saw an inflationary number that upticked again. So people are absorbing that. The self-fulfilling prophecy doesn't maybe feel like it's going to happen. So we'll see. And again, the feeders being higher with corn higher, that's fairly impressive too.
Yeah, the beef export sales just a little over 14,000 tons this past week. Just wanted to point that out. Now looking at the lean hog trade, they had the tremendous losses here on Wednesday, and they're showing more here on Thursday. October down $1.10 at 80.47. December down $1.27 at 73.75. Man, they've given up a lot of ground. Are they going to stop the bleeding today or not?
The best thing I can say about lean hogs today so far is that we're not down more, right? That was a very nasty day yesterday. And that came after weeks and weeks of trying to break through key resistance, trying to go higher. We just couldn't manage to do it. But we had come well off the lows. I think we were due for a bit of a technical correction. Cutout values are still really good. Weights are still very low. I think there's good reason to think that we're going to recover from this at some point. But we're just kind of sitting here on pins and needles, hoping that it doesn't get worse for today and that we can say, hey, the dust has settled. That was just a little bit of a corrective move in nature. And now we can try to resume those highs and get through them. But I don't know, it's a long day yet, Marlon.
Well, and that it is. And Susanna and I were just talking about that a little bit ago. Got a lot to unfold. Okay, well, thank you, Ted. Good to talk with you again. Ted Seifried of Zaner Ag Hedge in Chicago with us here on a Thursday morning.